in Shanghai, silver is trading almost at $40 an ounce already. So yeah, I don't think there's much resistance up until the mid 40s. And once we get there, you could see silver having $5 days up. You're going to see a lot of volatility. You're probably going to see the COMEX exchange raise margins, which will probably dampen down a little bit silver. But the other thing that's going on, and I know Trump announced a possible tariff.
Silver is already trading near $40 in Shanghai, highlighting strong demand in the East. As momentum builds, we could see sharp price movements, possibly $5 swings in a day, with potential volatility sparked by events like COMEX raising margin requirements or new trade tariffs. In the long term, silver could reclaim its role as money and surge far beyond current levels. Meanwhile, Trump has proposed new tariffs, adding further uncertainty and potentially boosting silver's appeal as a safe haven asset. Mario Innecco, a well-known financial commentator and investor, highlights silver recently hit a high of $37.30 per ounce, its highest level in over a decade, signaling a potential breakout. While the market could move in either direction, the overall trend looks bullish, with little technical resistance up to the mid-40s. Silver is trading at roughly about $38 to $40 per ounce USD, well above COMEX pricing. Shanghai Futures Exchange warehouses added approximately 44 tons in a single week, pushing total holdings to around 1,340 tons, the most significant volume inflow in months and a clear sign of intense physical demand. While vault stock levels in Shanghai rise, COMEX inventories continue to draw down, indicating metal is flowing into China as Western outlets' supply shrinks. Gold demand in China has been strong this year, reflecting a broader movement of the yellow metal from the west to the east. But the Chinese aren't just accumulating gold. They have also been hoarding silver in recent months. The Shanghai Metals Exchange has reported a significant surge in silver volume, with prices consistently higher than Western exchanges. The price premium in China compared to the West has been as high as 10%. This signals a robust demand for silver in China. Chinese silver imports have also surged, hitting a three-year high of 390 tons last December. In June and July this year, imports broke through the 400-ton level. A year ago, import levels were half that, averaging in the 200-ton range. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
Silver was at $37.30 on the spot. Last month, the high was $37.31, 33. So we're very close to continuing the breakout in silver. Yeah, we are at like 14-year highs, I think, maybe 13. And by the time you listen to this, we could be a lot higher, maybe lower, who knows? But I think the trend looks very good. And what about the altitude? Rarefied air. Well, I'm gonna play golf later on today with my sister and a couple of friends. And the golf course here is at 4,500 feet. So the air is a lot thinner and the ball flies a lot further. So for example, if I usually hit a 9-iron, I'm going to be taking a pitching wedge because I don't need as much club because the air flies further. So what I'm trying to say here is that there's not much resistance in the air for silver or on the charts. And that's why I think we're at rarefied altitude on silver. And silver is more than just how can I say, a industrial commodity. Silver has been money for thousands of years. So I'm gonna sit down here, have a chat. Just seen the train go by, the MOB train, the Montreux Oberland train, or the MOB, as for short. It's just going by. So if you want to get up here in the Bernese Oberland, you have to, if you fly to Geneva, you take the train to Montreux, the normal train, and then you change there, and you take this train, and it stops right near the place where I'm staying. Very convenient. But we did drive up. We did drive up this time because we had a bit of luggage, because we're staying 2 weeks. But anyway, back to silver. Yes, we've been reading that there's been a shortage of silver, silver deficit for the last few years, and I think that's going to continue. And why is that? Well, because major producers like Mexico, they are making it politically difficult for foreign companies to go there and explore for silver. I think recently there was news that only existing mines could continue to be mined, that the government wouldn't give new licenses, so that's not going to help. So the other thing is that with silver, unlike gold, there's very few primary silver mining, producing silver mines. A lot of times the mining is done alongside copper and other metals. So yeah, and the price has been kept suppressed for so long, and costs have gone up so much that recycling existing above ground silver, and silver of course is in all kinds of products, so recycling silver is not that economical. It will probably become more economical, of course, as the prices go up. But to start a silver mining business, to do the exploration first, and then to develop the mine, get it producing, it takes years to do that. And I think that's why silver it has a lot further to go. The other thing is that there's a lot of paper shorts out there that will need to be covered. Yes, some of the bullion banks, they go short paper silver that they sell to hedge funds that go long. But that's part of it. But I think the central banks, they're heavily involved in suppressing silver. And I've seen open interest figures from decades ago, especially in the 70s and late 70s and 80s, of how the open interest in silver was closed out as the market rallied. The Gnome of Zurich, the guy I met last November at a precious metals summit mining conference in Zurich, and he definitely thinks that only central banks could really carry all this huge position in silver. And why would banks nowadays want to trade silver if silver is not part of the monetary system anymore? But I actually think that silver is going to become more and more important. Silver will make a comeback. I mean, if you think of the word silver, in a lot of languages it means money. So it's in our DNA. So that's what's going on.
Mario shares his personal experience profiting from silver by stacking coins and bars since 2003, occasionally selling when needed but rebuying later. He also invests in numismatic silver and silver mining stocks like Avino, Vizsla, and Pan American Silver. He warns that while miners are a good option for those who find physical silver bulky, investors must do their research. He also trades silver options but advises caution due to manipulation by bullion banks and the high risks involved. Moreover, the aging of the old list behind silver, the typical pattern in bull markets, and the high gold-silver ratio, approximately 89, suggests that silver may outperform. The gold-to-silver ratio has climbed to around 100 to 102, well above its historical average of about 55 to 80, highlighting silver's significant underperformance relative to gold. Gold continues to benefit from central bank demand and geopolitical uncertainties. Banks like Goldman Sachs reaffirm that gold is likely to outperform silver in 2025 due to stronger institutional support. On the other hand, silver's appeal is rising fast, driven by expanding demand from AI, EVs, solar energy, and electronics sectors. These fundamentals support greater upside potential than gold in percentage terms. History shows that silver tends to follow gold with a lag. Gold may trigger the bull market, but silver often overshoots during the later stages. Analysts expect a significant silver move once momentum catches up. Mario critiques claims that the U.S. economy is back just because stocks are at all-time highs. Instead, he attributes the market rally to inflation, debt, and currency debasement, comparing it to hyperinflation periods in Germany, Brazil, and Zimbabwe, where stock markets soared as people fled collapsing currencies. The speaker emphasizes that while the rich gain from this, average people without assets are hit hardest by rising living costs and stagnant wages. Now, let's shift our attention towards the interview.
How do you profit or benefit from silver? Well, I've been stacking coins and bars since 2003. Yes, unfortunately, I've had to sell in the past some of that silver, but I've bought it back. I think it was back in 2012. I had to sell a whole shoebox of half dollars, 1964 half dollars, because I lost my job in the city, closed down my department, and I wanted to pay off some debt, and that's what I used it for. But I try not to get rid of my silver. The other kind of silver that I think, that I like, but it's more of a collector's silver, is the numismatic silver. That should do well as well, but the point of that is not really to sell it, I would say. And what about mining? Well, silver miners, as I said, there's not too many of them around, but if you go on SILJ ETF, you can see a good list of their holdings and look into that. Now I'm going to tell you some of the ones I have that have done well, and this is not like financial advice, and I'm not telling you what to do, but one of them is Avino Silver and Gold, ASM. That has done really well, and I'm still holding on to it. I have sold some to buy other miners, like in silver and gold, but technically it looks really good. I think it could go up even more. It's a silver miner in Mexico, and then you have Vizsla Silver. That has come off recently because they did a financing, but it's a good company. I think I have some of that. So those are the two, but there's other silver miners like Pan American Silver. That's a very good company. So you can go down that route if you don't want to buy physical silver. If you think it's too bulky, you go with the miner. I like both. What about trading silver? Well, I haven't been really trading regularly the last few years, but my background is in futures and options brokerage, so I'm familiar with these markets. But recently, a few months ago, I bought some calls in silver, and I still have them, and they expire on the 28th of August, and they're starting to look better. But the problem with options in silver is that the bullion banks control it. They kind of make sure that on expiry, the key levels, like 45 or 50, or I've got a 42 call that expires on the 28th of August. Yeah, they make sure that those levels are protected, but you never know. If they lose control and they have to short cover, it could work out. So the value of those options fluctuate a lot. Could be down like 60% one day, and the next day you start making money depending on how quickly gold goes up. So now it's going to be a little bit of a race against time, because still got over a month to go, but need to see fast move in the price for ops. So unless you're really familiar with options, I wouldn't touch it. And I haven't really put too much money into it. It's money that I can afford to lose. That's the way you got to look at it. And I'm long options, so I pay premium. I don't, I've known and traded options for over 30 years, and I try not to go short options or sell options to get premiums. I think that's very dangerous, especially calls. because if you sell calls, the amount of loss you can make is unlimited. Puts is a little different because normally markets don't go, a commodity or a stock doesn't trade below zero normally. Well, and I say that because of crude oil. During COVID, it traded at minus $37.50, which is crazy, of course. And that happened because the WTI contract, you couldn't deliver it. Or you couldn't store it, in Oklahoma, where the storage facilities are for that contract. So people were caught holding crude oil with nowhere to store it. So they're giving it away. So that was a freak incident. You never know. You never know. Am I saying silver or gold go negative? No, I'm just saying, giving you an example because of the options, how to trade options. So yeah, it's very early here this morning. There are a few people running. It's 10 to 8. I get up very early in the summer. And as I said, I'm playing golf this afternoon with my sister, a couple of friends. We only played 9 holes. Weather here is very nice. Last week when we arrived, it was like really hot. Then it got cold a little bit and it rained, and now it's sunny again, but not as hot. It's like in the mid-20s Celsius, like 22. Right now it's probably chillier. It's probably in the like 12, 13 degrees Celsius, but it's gonna warm up. What else? What about gold? Well, yeah, gold is lagging a little bit now. Silver, which is actually not a bad thing, because as we know, and hopefully you know by now, since 1971, during precious metals bull markets, eventually silver catches up and starts outperforming. So this is a good sign. And the gold-silver ratio is still very high levels. I think it's around 89. It might be a little different, a little higher or lower, but I think 80 is a key level there. And what else is going on? Well, in terms of the other markets, like the stock markets, I've seen a lot of comments, especially like by the Trump administration and President Trump, that everything is great now. America is back because the stock market is at all-time highs. I don't think that means anything, personally. The reason why the stock market is high is because there's a lot of liquidity in the system, a lot of inflation, a lot of new deficit spending. Did you know that during the German hyperinflation, the stock market did really well? Did you know that in Brazil in the 80s and 90s, during their hyperinflation, the stock market was the place to be? Same thing in Zimbabwe, same thing in Venezuela. And why is that? Well, because when you trash the currency so much, people move away from the currency. They want anything but the currency. So yeah, I'm not too sure whether America is back or doing great, really. Maybe the people who own most of the stocks, which is the top 1%, and maybe the top 10%, their portfolios are back up, but the vast majority of Americans are still struggling with the cost of living. It's going to get worse, because when you trash the currency, those are the people that suffer the most, because they have no assets, and they struggle with the basic necessities. So you could have I think Jim Sinclair said that, you could have a deflationary environment economically, not monetarily, of course, where the majority of the public is suffering, is struggling to make ends meet, borrowing even more because they can't survive with what they earn, because their wages don't track the real inflation, because governments always lie about inflation. And at the same time, you've got the stock market making all-time highs, commodities making all-time highs, and the wealthy raking it in.
Mario Innecco shows the widening gap between East and West in silver demand and pricing, with Shanghai silver approaching $40 due to substantial physical inflows and industrial demand. While gold central bank purchases still support gold, silver's increasing usefulness and monetary history position it for higher percentage growth. He cautions against trading silver contracts owing to manipulation risks, but sees long-term potential in both actual silver and quality mining equities. In the face of global economic turmoil, he believes silver's resurgence as a monetary asset is unavoidable. Why does silver trade at a higher premium in Shanghai than on Western exchanges? How does the gold-to-silver ratio predict the future performance of silver? Please provide feedback in the comments section below. If you found this video helpful, give it a thumbs up and subscribe to stay up to speed on our latest content. We appreciate you being a part of our journey.